one I think I completed, right? Now I need to start this one. Supply of capital goods. That means when you use the capital goods, when you are using the capital goods, after some time, if you want to dispose of the capital goods, what will be the GST liability? Okay, GST liability in that case will be whatever the price at which you are transferring, on that the prevailing GST rate for that transfer, or you have to reduce 5% per quarter from the date of invoice till the date of sale. 5% per quarter you need to reduce. How much GST you get? I mean to say the GST minus 5% per quarter. Assume that you have used for 6 quarters. If your GST, when you are purchased, you would have paid GST of 1 lakh, assume, and you have used for 6 months, 6 quarters, 6 into 5, 30% you have to reduce. It comes to 70,000. 30% of 1 lakh comes to 30,000. 1 lakh minus 30, the balance will be 70,000, or the transaction value on which you pay the GST. Assume that you have sold it for 2 lakhs, 10 lakhs. On that you have to pay GST of 12%. 10 lakhs into 12%, 1,20,000, or 70,000. 70,000, how I arrived? 1 lakh is the GST paid at the time of purchase minus 5% per quarter from the date of invoice to the date of sale. Assume that you have used it for 6 months, 6 quarters. That means 6 into 5, 30% you need to reduce from 1 lakh GST amount which you have paid on acquisition. The balance comes to 70,000. 1,20,000 or 70, whichever is high, you need to pay to the government. That is what it is. You might get question on this capital goods. Okay, understood? Next, utilization. Utilization means how much ITC you can utilize by meeting your outward liability. For meeting your outward liability, how much ITC you can utilize. Okay, assume that you have made a sale of rupees 1,18,000 total sales, which includes 1 lakh value of the goods or services, 9,000 and 9,000 CGST, SGST, 18%. On 1 lakh comes to 18,000, 9% CGST, 9% SGST. This is utilization. This one, how much you can, of this, how much you can utilize while meeting the output liability. This is your output liability, 9,000, 9,000. Okay. On purchase, you would have purchased some goods on which you would have paid 9,000 IGST. Example. Okay, all these things are example. 9,000 you have paid IGST. Now the question arises, can I utilize this 9,000 against my output liability of CGST, SGST? You need to understand few rules here. What are the rules? IGST can be used to set off CGST, SGST, GST. You can use the IGST of ITC against your CGST liability or SGST liability or UTGST liability. Okay. Likewise, CGST, SGST, UTGST, ITC can be used to pay IGST. That means if your liability is IGST, that means you have made a interstate supply, you would have collected IGST, you have purchased internally within the state, there you might have CGST and SGST ITC. To pay IGST, you can utilize CGST, SGST. If it is union territory, you can use this UTGST also to meet your IGST liability. But always remember one thing, SGST cannot be used to pay GGST. Likewise, GGST cannot be utilized. You should not utilize to pay SGST. That means SGST cannot be utilized to pay CGST. CGST cannot be used to pay SGST. Other thing, you can utilize CGST and SGST to pay IGST. IGST can be utilized to pay your CGST, SGST liability. There is no proportion. You can utilize even 1 rupee of SGST, balance in CGST. 10 rupees in CGST, balance in SGST. Like that, you can utilize your ITC of IGST. There is no restriction of the amount to be utilized. You can utilize any amount. Okay, let's see the example. See, this is your 4 scenarios. Okay, of this you have liability of IGST in the first scenario is this much, CGST 30,000, SGST 30,000. This is your output liability. This is common for all 4 scenarios. Okay, you get the question on payment of tax. This is nothing but payment of tax. Okay, you have IGST liability of 1,20,000, CGST liability of 50,000, SGST liability of 50,000. This much you have to pay. This much you have to pay. You can pay utilizing your ITC available. Okay, first thing. Second thing, while making the payment of your GST, first you should make IGST ITC nil. Which ITC? IGST ITC nil. After that, you can use IGST, ITC of CGST, ITC of SGST to make the payment of CGST, SGST. If any IGST ITC is available, first you should make that IGST ITC to be 0. Okay, let's see. This is first case. This one. My output liability IGST 120, this is 50, this is 50 I have taken. Now I can utilize these three. First, my IGST liability is 120. I will utilize IGST 120. Balance remains 20 here. This 20 can be utilized to set off CGST and IGST in any proportion. 1 rupee CGST, 99,999 SGST. 0 CGST, full SGST. 20,000 CGST, nil SGST. 19,999 CGST, 1 rupee SGST. Any proportion you can do. But first you should make this 0. I am using to pay my CGST utilizing my IGST ITC. IGST ITC I am making. Now IGST lab becomes 0. 120 I have used here. 20 I am using it here. Now balance CGST to be paid 30,000. That 30,000 I will use it ITC whatever I have CGST. My SGST liability is 50,000, but I have only 30,000 ITC. I will use that one. I will pay balance 20,000 in cash. Understood? Understood? Yes or no? Yes, sir. Okay, see here. Note. First, we should make ITC of IGST 0. Here I have done that. IGST, ITC I have made 0. This 20,000 can be used here also. This becomes 0. Here 10,000, here 10,000 you can use. Any proportion. But before setting off ITC of CGST and SGST, if there is any ITC available of IGST, that should be made 0. Then only you can use the ITC of CGST and SGST. Understood? Okay. Now, can you guys tell me what is the answer for the second scenario? This is your output liability. This is the second scenario of ITC available. Can you guys tell me how much to be paid in cash? If at all, if we are to pay. Are you guys doing? See here, 1,000 is my output liability. I have IGST 1,10,000. That means 10,000 yet to pay IGST. Okay. CGST. I have output liability 50,000, but I have ITC 70,000. That means there is a excess ITC available 20,000 with respect to both CGST and SGST. But there is 10,000 liability to be paid of IGST. This 10,000 I can utilize full CGST out of this 20,000, whatever is remaining, full 20,000 I can utilize, or I can utilize 1 rupee here, 99,000, 19,999 from SGST. Any proportion you can use. Okay, I'm using from CGST. This 10,000 of IGST liability can be met. 5,000 SGST, 5,000 CGST, like that you can do. Okay, balance of ITC. Here 20,000 was remaining. Out of the 10,000 I used to pay IGST, 10,000 remains. Here 20,000 remaining. Balance will be carried forward to the next period. Like that, other scenarios. Understood, guys? Very important. You will get, the question will get in such a way that they will ask you the question like this: calculate the tax liability of some person's name, or this one they will give status, individual, firm, company, like that. They will tell that maximum cash to be paid. That means you have to utilize minimum ITC. You have to pay maximum cash. They will tell. Otherwise, they will give in such a way that maximum ITC can be utilized, minimum cash to be given. You have to think which one to be, zero it out first. In that way, they will ask the question, especially for new scheme, because your system is descriptive one. Hence, chances of coming in the exam is very high. You may not get separate question on this. You will get question of the other questions, and they will ask you to calculate payment of tax. In that question, it is linking question. Okay. Next chapter, input service distributor. What is that? Input service distributor. We call it as ISD. Input service distributor. It is only applicable to service, not to the goods. Applicable only to service. Okay. Before I start, let me explain you the concept. Applicable to company, normally it can be applicable to anywhere. I mean, if you take it in the larger perspective, it is applicable to all, but I will take the example of a company. Assume you have a company, Infi. I will take Infi. Okay, it has branches all over India. Assume. Okay, in Tamil Nadu, in Andhra Pradesh, and Delhi. It has 3 branches. Okay, I will take 2 or 3 examples. The same logic will be applicable to all the branches for all kind of services. Okay, this Infosys company wants to get audit for these three branches along with head office, which is in Karnataka. Where it went? Okay. You need to do audit. You appoint a CA who will carry out the audit for all these branches along with the head office. Tell me, will CA gives invoice to all these respective branches, or he will give invoice only to head office for the audit of all the branches including head office? He will invoice to the head office or he will invoice to the respective branches as well? Simple. Your company secretary work. If you do it for branches of the company, will you invoice to the branches if the appointment is made by head office? Will you invoice to the branches or only to the head office you will invoice? Be it in the banking sector also, all over the head office. You will invoice to the head office. Okay, but the benefit will be received by all the branches. Now the question comes, how to allocate whatever the GST you would have taken from head office with respect to the branches. How to allocate by head office to the branches. Assume that two scenarios. One scenario, you are also will be in Karnataka, and second scenario, you are in Maharashtra. Okay, two scenarios. First scenario, let me explain. If you are also in Karnataka and head office is also in Karnataka, you will invoice to the head office by mentioning CGST, SGST, right? Because it is intrastate supply. In that case, what the head office will do to the branches which is in Tamil Nadu, Andhra Pradesh and Delhi, they will have to generate the self invoice called as input service distributor invoice. In that, whatever the GST the head office would have received will be allocated to the respective branches as IGST. Now the question comes, how to allocate? The allocation shall be based on turnover, proportionate to turnover. If the turnover of this one is 1 lakh, if the turnover of this one is 3 lakhs, if it is 2 lakhs turnover, on this basis, the head office will distribute the GST amount to the respective branches. This is when when you have charged as charge the GST as CGST and SGST being it is interstate supply. Assume that you are in Maharashtra, head office in Karnataka. Obviously, you will charge IGST. Hence, head office will prepare a IGST input service distributor invoice, ISD invoice. The same will be distributed to the respective branches as IGST. If it is received CGST, it will distribute it as IGST to branches which is outside the place of outside the state. If head office has received the invoice as IGST, the same will be distributed to the other branches. The distribution methodology will be in proportion to turnover. Which turnover? Previous period turnover, previous quarter turnover. If there is no branch exists in the previous quarter, previous to previous quarter where the details are available, that quarter's turnover can be used. Understood, guys? This is one distribution of GST received by the head office to the branches. Assume that out of these three branches, only two branches will take the service. Then the distribution should only happen to only those two branches. If any service is taken exclusively by other branch, the whole amount shall be distributed to the respective branch which has taken the service exclusively. This is input service distributor. I have taken the audit service as example. If it is advertisement, in that advertisement, Tamil Nadu will be manufacturing chocolate and biscuits. Andhra Pradesh branch will be manufacturing ice creams, and Delhi branch is manufacturing other items like lollipop or some chips like that. If advertisement is given by the head office for all these products, where there is a exclusive products are there, the entire GST will be transferred to respective branches. If all branches are manufacturing the same product, in that case the GST will be distributed to all those branches proportionately with respect to turnover. Understood, guys? Understanding? This is nothing but IGST because ISD. I have given all these things. It looks very, so much content. I have taken 4 states. I have taken some 3-4 services, auditing, advertisement, other services, consultancy like that. I given location of the supplier. That means in this case I taken the CA is based out of Karnataka as well as Maharashtra like that. These are the places. For which company it is common for all, exclusive like that. What kind of invoice the service provider has should CGST, IGST invoice, SGST invoice, IGST invoice, IGST invoice, type of GST to be distributed, If it is in the same state, CGST, IGST only distributed if it is received CGST, SGST. If CGST, SGST is received, the branch is outside of the state, then the IGST will be distributed. Like that, I have given everything here. In which proportion? In proportion to turnover of all the branches, including the branch which has not taken also I have included. Okay, here the place of supply provision, you need to understand where the location of the supplier, location of the receiver. It's quite simple. Where the service provider is there, from which place he is providing the service, where you are in which state you are receiving the service. Those two are the important, and the other branches. Other branches are where? Is it in the same state, different state, like that? Is it the exclusive service or common service for all branches? Based on the turnover, you need to distribute the GST amount. Understood, guys? Any doubt? Do you guys have any doubt in ISD? ETC relating to job work. Job work means in some other person is doing the work on your goods. That is called as job work. In this case, you need to remember the time limit within which whatever the goods, like goods means input, and the capital goods, whatever you have sent to the job work, within what time you have to receive it back. That is the main thing here. Okay, the time limit, they will ask the question on time limit. That means they give the case study. On this date, they sent goods to the job worker. He has processed the goods, and on this date, he sent back the goods to you. Like that, they frame the question. You have to see when it has been sent, when you are receiving back. Those two time limits is according to the provisions of the Act. If yes, you can take the ITC. Otherwise, you need to reverse the ITC taken. If you haven't received, the goods within the prescribed time. Okay? See, very simple. Assume that you are in Karnataka and your supplier is in Tamil Nadu, and your job worker is in Kerala. Okay, assume you want to purchase the goods from Tamil Nadu supplier, and you want to send the goods to the Kerala job worker. There are two ways. First, you receive to your place, then you send to Kerala. That is one option. Otherwise, you can send directly to job worker who is in Kerala. You can ask the supplier directly send to the job worker instead of you receiving the goods and sending the same goods to the job worker. Now the question arises, when can I take the ITC? I mean, when can I, what is that? Avail the ITC becomes the question. The same kind of logic you have to apply to the capital goods, only the time limit changes in capital goods. Okay. If you are receiving and sending the goods to the job work after you receive, you can avail the ITC as soon as you receive the goods in your factory. Okay, as soon as you receive the goods in your factory, you can take the ITC. While sending the goods, you can send the goods via invoice or DC, delivery challan. Once you send the goods to the job worker, the date when you send, within 1 year, you have to receive it back to your factory from the job worker. What is the time limit? Within 1 year from the date when you sent the goods to the job work, from that date, within 1 year, you have to receive back. Okay, I have given the dates also. I will share this file. Please refer this one, whatever the explanation I have given. Okay, example, inputs. I am sending the inputs to the job worker on 20th April 2020. Okay, input should be received back within 20th April 21. From this date, within 1 year, on or before 1 year, you have to receive back the inputs. Whereas with respect to the capital goods, within 3 years, you have to receive back the capital goods. Capital goods can also be sent to the job worker because he doesn't have that much investment to make to process your goods. What you will do? You will purchase the capital goods and the same capital goods will be sent to the job worker. Those capital goods you have to receive back within 3 years. Understood? There is a relaxation. You have to seek the permission or extension from the respective authority to receive back the input or capital goods. For the input, extra 1 year will be given. For capital goods, another 2 years extra will be given. That means input you can receive within 2 years. If permission is granted, you have to apply for the permission. For the capital goods, within 5 years you can receive, provided if you seek the permission and it has been approved. This is what case you receive the capital goods and you receive the input. After you receiving, you will send the same to the job work. Job work has to send the same to you within 1 year with respect to input, within 3 years with respect to capital goods. Okay, second scenario. You will request the supplier to directly send the material to the job worker. Directly send the material to the job worker. In that case, you can take the credit of the ITC of the materials on the date when the job worker receives the input in his factory. Receives the input in his factory. Receives the input in his factory. Okay. When he receives in his factory the input, you can take the credit in your company, in your accounts. Okay, be it capital goods or be it input. If the input or capital goods directly sent by the supplier to the job worker, in that case, the date when job worker receives the input or capital goods, you can avail the credit. Now the question arises, from within which date you have to receive back the material. Same time limit will apply, but only the date changes. Date in the sense when the job worker has received, from that date 1 year and 3 years you have to compute. The practical theory questions will come on this. What is the time limit? Please explain the provisions relating to the time limit applicable to materials or inputs sent to the job worker should be received, or capital goods, like that they will ask. And another one, these two are the one is sent to the job worker after received by you. Another case scenario, sent directly to the job worker from supplier's factory. These two are the main thing. There is a third one. Can the principal make a sale or supply from the job worker's premises? The question arises, can he make the sale from the job worker premises without being brought to his factory? Answer is yes. The principal can effect the transfer supply from the job worker's place, provided principal should mention job worker's place as his additional place of business. His additional place of business. If a job worker takes the permission mentioning the job worker's place is the additional place of business, the material or the goods can be sold directly from the job work premises without being brought to the principal factory. Okay, I given all these things. Input sent by supplier directly to the job worker. When the credit can be taken, I've given everything. Supply can be made to customers directly from place of job work. Yes, if principal declares job work place as his additional place of business. This much you guys need to write. Okay guys, understood? This is about job work with respect to ITC. Here ends all part of ITC. First one, eligibility and condition. Eligibility and condition. Eligibility and condition. Second one, block credit. Block credit. Third one, special cases. Fourth one, input service, capital goods sale. This afternoon, first thing we did. Fifth one, input service distributor. Sixth one, job work and payment of tax. Around 7 to 8 topics within the ITC. Here we have completed. Okay.